Hey everybody, good afternoon. Welcome to today's video. I'm trying to do a daily video, I guess, with a lesson, the daily lesson from the Black Room, basically, for you. So I hope you're enjoying them and you're finding them very educational. Today I would like to talk about uh, a topic that I talked about briefly yesterday, which is novice versus professional gaps. Um, the most important thing, the most important step when it comes to identifying or determining whether the gap, when it comes to analyzing gaps, is determining whether the gap is professional or novice. Because if it's professional, we want to play in the direction of the gap, meaning if it's a gap down, this was a really good professional gap. We want to play short. If it's a professional gap, and what does professional mean? Professional doesn't mean it's caused by the professionals necessarily. It means it's a surprise gap. The stock is gapping in a direction the that people didn't expect. How do I know it's gapping in the opposite direction? Because look at yesterday's bar, right? The stock popped really hard, got bought big time the day before the gap, and the next day gapped down, not up. So most people were expecting it to probably gap up, right? When it gaps down, every single person that bought it and held it, and it does not matter whether those traders that held it were smart traders, dumb traders, small traders, big traders, Wall Street people, novice people, doesn't matter. Every single person is underwater and is hurting. And this was a 30% gap down and still dropped another $10, right? Or maybe $7, whatever. So that's the idea behind professional gaps, is that I like, you know what I like to call it? I like to call it the human trap. The human trap, because it traps people. That's exactly the right word. Traps. Novice gaps, they are caused by novice people basically chasing the stock, okay? Or finally hearing about becoming aware of the news and wanting to not miss out. An example of a novice gap would be today, AXON. Yesterday, the stock gapped up 100%, I think, and then still ran up a lot. I had a nice little trade on it yesterday in the black room. A long, not short, long. Today, guess what? It gapped another 25%. What is that? What is that? That's novice. Why? Because the professionals or the surprise happened already yesterday. Today, that's reaction, right? That's a reactionary gap. Reaction gap to the news which was already factored into the price of the stock. So that was novice. Of course, today it was hard to borrow, so I couldn't short it. But this was a good novice gap. Now, not every stock that gaps up above a green bar is novice. I'll give you an example. Sonic today, that gapped after 3 green bars in a row. Let me just adjust the chart so you can see better. There it is. See this? 1, 2, 3, and then a gap up, and it still ran up all day, even though the market was weak. Was that a novice gap? Not once did I say this was a novice gap in the room. In fact, I said that's actually more of a professional gap, because we were gapping just above the resistance. But not only that, because there are other things that you can that I can use in when I'm analyzing gaps, such as the size of the bars. Look at this. The first bar was a wide range igniting bar. The second bar was pretty big too. The third bar was the smallest. When it comes to novice gaps, we want to see the bars increasingly get bigger and bigger. So we want to see the first bar small, the second bar bigger, and the third bar the biggest. And if there's a fourth bar, then that we want it to be the biggest, preferably. Okay. We also don't want the stock to be kind of breaking out like this was breaking out. We want a stock that's up a lot and extended away from the 20 MA and then gaps up. Take a look at this. This was not a huge gap, but look at this. It's exactly the right type of gap, a novice gap. Small bar, another small bar, and then the last bar was the largest. What does that tell you? Novice people are already chasing it, and then they all jump in basically, right? And then it gets sold. Now, why does the market seem to always want to punish the novice traders, the latecomers? It's not, it doesn't. The market is the most neutral entity you can get. It's all about supply and demand. The reason why the market always goes against novice traders is because they are the one, they're basically the last batch of buyers in this case, or the last batch of sellers. So the stock is running out of buyers, running out of demand. So when it gaps up, it's going to get sold. Any kind of selling, and then it comes in hard because there's no more buyers. Everybody that wants to be in is already in. So when it gaps up, any kind of selling, and there's always some selling because people take profit, especially when the stock is up a lot already. Wouldn't you take profit if you had a 13% gap up in your favor after a big run up already? I would. So, and that's why the stock comes in. Does that make sense? So I hope that makes sense. It's really important. I try to share with you some lessons, bits and pieces of basically a complete course that we have about gaps and how to trade them. It is called Advanced Gap Strategies. Okay, you can look it up online at t3live.com or contact customer service. Highly, highly, highly recommend it. But I also like to share with you talk about things that are currently happening right now. For example, today I talked about the Sonic from today, right? Another one that was not so novice was 5. Notice the same exact problem as the Sonic. The bars were getting smaller. We want the bars to be getting bigger, which it would indicate that novice people are chasing. It means more and more people are buying it in the same amount of time, right? In any given day, and so that shows exuberance or excitement amongst the novice traders. And so when it gaps, it tanks. That's not the case at all here. These bars are getting smaller, not bigger. And then a huge gap up, and the market was weak. It still didn't get sold. Stayed bullish. Does that make sense? Now, I just want to say one additional thing, that sometimes big gap ups, sometimes, not always. Example would be the AXON was 100% gap up. It still ran up, right? Sometimes big gap ups get sold regardless of whether they're novice or professional. Why? Simple reason. Very, very simple reason. People take profit. If I'm in a stock and it gaps up, I don't know how much this was, it's 20% in my favor, I'm going to take it. Probably. Or I'm going to take a little bit at least. Does that make sense? So sometimes big gaps, whether professional or novice, big gap ups will get sold. Similarly, big gap downs, whether professional or novice, might also get bought. Like the MDXG today got bought initially, and then it eventually got sold. Now, I also want to say one last thing here. I don't want to make this a really long lesson. That if the stock gets bought, if it's a big gap and it's not a novice gap, was this a novice gap? Gapping under 3 months worth of basing, every single person basically got hurt today on it, that bought it, that was in it long. Was that a novice gap? No, that's not a novice gap. So why did it get bought? It was a 35% gap down. That's why. You might say, oh, it was at support. It actually gapped under support. That's not the reason why it got bought. It's just the size. And the stock was down a lot already. So probably a lot of people thought, oh, this is on discount, let's buy it. Some maybe looked to cover and it popped. But if the stock, if it's not a novice gap and it gets bought in the morning, it typically gets sold in the afternoon. Okay? Or here's another one, REVG, I think, was a huge gap down. Was that novice? No, it's gapping under a green bar. But look at the long-term trend on the daily chart. Down a lot. So if it gets sold initially, what do you look to do? You look to buy it. You look to fade it. Does that make sense? And vice versa. The MDXG got bought, you look to short it on the run up. And that was actually my best trade today, the MDXG. Just want to show you real quick. Now, why do I like to show you this? Because I'm a real trader. Okay, I do what I say. I don't just preach. And the XG was my biggest trade today. I did do it more than once. It was multiple times. And ironically, I did the Sonic also. And even though I just spent probably 10 minutes telling you this was not a novice gap, I shorted it. Made money on it short, not long. Obviously, I would have made a lot more money if I had played it long, but I liked other things more than the Sonic as a long. This turned out to be the best, but you don't know that in advance. Now, why did I short it? For one simple reason, that if a stock is up a lot all day, let's say, and breaks out kind of into 12 o'clock or puts in a topping pattern, this is a very high odds short trade that it's going to follow through. So notice right at 12 o'clock, right at 12 noon, 5 minute, that's a short. But it didn't work. But look what it did. Just want to show you one other thing here. Look what it did. Broke out to new highs, 77, that went to 84. So it did stop me out. And then the breakout bar was followed by an inside bar. Okay, I'll do a separate lesson on this because it's way too important to just talk about it briefly now. The number one way that stocks that breakouts fail is by breaking out, and the breakout bar is followed by a narrow range bar. And if the narrow range bar's low gets taken out, an inside bar, then it's a breakout failure. So I noticed I got stopped out and I was down 500 bucks or something close to 500, slightly more, I think. And then notice the inside bar. Of course, I'm going to get back in it. So I got back in it, and then it took forever for it to roll over. But by that time, unfortunately, my target caught up to me rather than the target caught up to the trade rather than the other way around. When I trade counter trend, I use moving averages for target picking. Okay, because in an uptrend, the stock is supposed to bounce off of the 20 MA. So that was my target, but it was much bigger. When I entered the trade, I mean, it was way down here. So I was supposed to make really good money on it. And then it went sideways forever, or so it seemed, that the target became small. So where is my P&L? Okay, so here it is. So I ended up making money on it, but it wasn't that much. But again, I was down initially, so that was actually okay on the Sonic. All right, so hopefully you enjoyed today's lesson. Again, I want to do these lessons mostly for room members as kind of a show of appreciation, but also to further their education and make them better, more knowledgeable traders. So I hope you're enjoying them, and I will catch you in the black room tomorrow morning. Take care, everybody. Have a good night.